Good morning and welcome to GrainTV. It's October 25th, 2012. I'm Logan Burgess. Joining me to my right is Cody Bills. Cody, let's jump into fire tip here. See how the grains are trading in the early going in Chicago. Cody, we're looking at a lot of red on this board right now. Soybeans the leader to the downside on the November contract, trading down 11 3/4 there. We have lean hogs, live cattle, both in the red. Crude oil moving a bit lower here. One thing trading higher is the dollar index, continuing to see a little bit of a bounce after some sharp selling last week. But Cody, really the number one story here for the grains that everyone needs to be focused on is export sales reported this morning. Another disappointing week there?
Yeah, I think it was, especially for corn and beans. They both missed analyst expectations. Soy meal and wheat, they came in right around analyst expectations, but I think they're being dragged down by corn and beans here this morning. Let's take a look at where we are in terms of meeting the USDA expectations. Right now, because we missed analyst expectations, we fell another 4.2 million bushels this week in terms of the pace that we were at last week. The problem is the trend from week 3 really to week 8 has been significantly lower. We're only about 1.8 million bushels ahead of pace now in terms of where we need to be to meet USDA expectations. So that is not very good. There's a good chance if we don't see a pickup here in corn that we now turn negative, and we got to be thinking, you know, does that mean that the USDA is going to have to revise export sales even lower? So pay attention to next week's export sales, especially for corn. If you take a look at beans here, we are well ahead of pace, mostly due to the sales that we booked for the new crop sales, basically late last marketing year. Right now we're 258 million bushels ahead of pace. We are doing very well there, but as you can see here, the last 3 weeks we've come in below what we need to achieve to meet USDA expectations. And the problem is that if we see a large crop out of South America, it could just absolutely kill our export sales in the later part of the marketing year. So we need to make these sales early, and if we don't see those sales made early, I think we have a problem on our hands.
Certainly near term here, Cody, in this market, you know, export sales for beans and corn both did disappoint. What's your kind of outlook on this market right now?
Well, I think technically short term, I think right now beans is going to be pressured lower, you know, and I'll tell you why. Basically, we have a 100-day moving average here on the chart. This 100-day moving average puts some sort of resistance level right around 1560. If you look at a previous support level that we touched back in July, you can see that what was support, we fell through it. Obviously, it acted as resistance a little bit back here. It's now going to be acting as resistance again. I think, you know, then you have these moving average. These are exponential moving average. We have the 20 and the 50-day. Both of them seem to be consolidating, kind of putting some pressure right around this area. So I see a lot of technical resistance. I don't think that we'll be able to penetrate and move above 16 here in the coming days. I think most likely what we're going to see is some selling here in the short term. That doesn't mean that we won't go higher later on, though.
Yeah, certainly. You know, Cody, if you switch over here to the December corn chart real quick that we have tabbed up there, my outlook here for the corn market's relatively the same right now. We discussed it on yesterday's show, Cody. You know, ethanol production right now is not moving at the pace needed to meet expectations from the USDA out of their October WASDE report. Once again, thanks to your report here, we see that export sales are lagging as well. That opens the door to possibly 2 revisions lower here in 2 critical areas here for the corn market in terms of demand as we approach the November 9th WASDE report here. So certainly a lot of pressure on this market. If we do see revisions lower there, it's going to be certainly bearish for price action. Bottom line though, you know, looking at this, 750 is rationing corn right now. There's not much debate about that. The corn crop isn't going to get any worse. It's in the bin. So now it comes down to demand. We've been talking about that a lot here moving forward. So I think for being a producer right now, it'll be important to have some protection on the downside here as we move through the winter.
Yeah, I would agree. I think corn really has a lot of potential to move lower here. It just looks like we saw this kind of cap, this double top right here, started to move lower. We consolidate. I think there's a good chance we take out $7 on the downside, and that'll put pressure on beans and wheat as well.
Right, absolutely. We'll keep you posted on that here on GrainTV. You know, if you want the platform that you see right now in your home or office, give us a call or visit us at grainhedge.com. We'll set you up with a free 10-day trial here to give you kind of a little test run of the product here. So give us a call if you're interested. That wraps up our show here, though, for Thursday morning. Thanks a lot for joining us. We'll see you tomorrow.